Hello, everyone, and welcome. My name is Marcel, and I'm part of the education team here at Scotia iTrade, and I want to thank you for spending the time with us today. Now, I will be your host and moderator for today's session, Understanding AI and its Role in Today's Market. Now, artificial intelligence has quickly become one of the most talked about technologies in the world. It influences how businesses operate, how industries evolve, and how investors think about future growth. Now, while AI has existed for decades, recent advancements have accelerated its adoption and brought it into the mainstream. Now, in today's session, we'll be able to explore the fundamentals of artificial intelligence, discuss how AI is being adopted across industries, and examine some of the opportunities and considerations investors should be aware of when evaluating this rapidly evolving area of the market. To help us guide through the discussion, we're excited to be joined by James Learmonth, Co-Chief Investment Officer and Portfolio Manager at Harvest ETFs. He brings over 20 years of experience as a U.S. equity specialist, and he's the lead manager on several of Harvest's income ETFs, which gives him a close, ongoing view into exactly the kind of companies at the center of the AI theme. Now, James, thank you so much for joining us.
Hi, Marcel. Thanks for having me.
Of course, thank you again. James, you and your team at Harvest have been in the AI space for a while now. So before we dig into strategy, we'd like to know about your role at Harvest and how AI has become such a big focus in your investment research and your portfolio management.
Sure. So as you mentioned, I'm Co-Chief Investment Officer and at Harvest ETFs, which means I'm responsible for overseeing our investment management team here. And I'm also a portfolio manager. So I am the primary lead manager on a number of our income leaders-focused products. Specifically, one of those is our Tech Leaders Income ETF, HTA. And so, as you mentioned, I've been in the industry for actually over 25 years now, and for most of that time, I have been focused in some capacity or other on the technology sector. And so that combination of having a long history and focusing on the technology sector and being the lead manager on our technology fund, AI has obviously played a huge role over the past few years in how we're looking at markets and how we're investing.
Thank you so much. Now, AI is a term that has been thrown around constantly these days, and I think it means something a little different to everyone. So at a high level, how would you actually define it?
First, the formal definition of AI would be it's a branch of computer science that is focused on creating systems that can perform tasks that normally require human intelligence. What that really means in practice is artificial intelligence models are very complex mathematical models that take in a whole bunch of data and use that prior data to infer outcomes based off of incoming data. So artificial intelligence is typically broken down into kind of two phases. You've got the training phase, and then you've got the inference phase. The training phase is basically where the model is trained or learns what prior relationships have existed between data points. So I like to think of a good analogy for this, I think, is a medical student and a doctor. So the medical student goes to school to learn how to be a doctor, absorbs a ton of past information, studying through textbooks. It takes a long time and it costs a lot of money to go to medical school. The inference side would be the doctor. So in inference, the model takes new data and applies those past relationships to it to make predictions or generate outputs based off of that new data. So that's where the doctor comes in. The doctor already has all that prior information from when they went to medical school, and patients come in and describe new symptoms to the doctor, and they apply that information in order to generate a diagnosis going forward and a treatment plan going forward. So that, in essence, is kind of what artificial intelligence does. It's just using these systems in order to identify past relationships, take new information in and compare it to those past relationships, and then generate a response.
Okay, I like that. So systems doing things that used to require a person, so to say. And then now that's also a pretty broad umbrella. So because people also throw around terms like machine learning, generative AI, and agentic AI as well, like they're all the same thing. Now, how do those actually differ from one another?
Yeah, so they're all different forms of artificial intelligence, I would say. So if you look at machine learning, this is basically just it's kind of a step in the AI process in a way. It takes all this past data and pours it into a model, and it in an effort to classify and sort all this data into different buckets. And then using that information, it can make predictions about future trends or future potential outcomes. Generative AI is basically a creative version of artificial intelligence. So a user puts in a prompt to an AI, like creating a text or an image or a video or something like that, and the generative AI creates that based off of relationships that it's seen in the past compared to that given prompt. And then agentic AI is basically the automation side of it. So these are what's called the automated doers or task performers. And to throw another analogy out there of the three, I think we can look at something that applies to all of us. For example, food. So a machine learning model would take 100 different kinds of soup with all the ingredients and recipes for those different soups, get it all put into that model, and it would try and identify what ingredients in the soup make the soup taste good. If we take that the next step to generative AI, could be a user who says, I'm having a dinner party, create a menu for me. And the generative AI would spit out recipes for a 3 or 4 course meal. The agentic AI would be kind of the doer. And so in that scenario, you would say, I'm having a dinner party. The agentic AI would take those recipes that were created, and then it would assign other agents, other AI agents to go out and perform different tasks. So one agent might go out and get the groceries and get all the food and ingredients. Another agent might do all the prep work. Another agent might do the final cooking. And so the AI agent is actually the doer that automates all those different tasks.
All right, that's actually a really helpful way to break it down, and also has me thinking about food during this lunch hour. Now, the interesting is that none of this technology is actually new. So what has changed? What's driven this rapid adoption we've seen since the last little bit?
Yeah, as you mentioned, artificial intelligence models have been around in some form or another for decades. What's really changed over the past several years, I would say, are the advances in high performance computing. And so that has really unlocked the ability for these models to become incredibly complex. So in the case of some of these very large foundational models, as they're called, such as ChatGPT or Gemini or Claude, many of these models have billions of different parameters or data points that go into them. Obviously, after that complexity and capability of these models has expanded, ChatGPT became public, and I think that really ignited a broad awareness of the potential for artificial intelligence models there. And that not only unlocked a tremendous amount of demand for artificial intelligence applications, but also sparked a huge amount of capital investment in order to facilitate the build out of these artificial intelligence capabilities.
Right. It almost feels like it happened overnight, but it's actually really been building on for years.
That's right. That's right.
So if we bring it back to today, how are companies actually using AI right now, and where are you seeing the biggest impact?
Yeah, I mean, we could spend a whole webinar just talking about the potential uses for artificial intelligence, to be honest. And I think companies are still trying to find the best ways to use artificial intelligence applications within their own processes. But I think some of the most exciting places or areas that we could ultimately see AI being used is areas like fraud detection in banking, where AI models can sort of analyze a large number of transactional data to try and identify anomalies and potential occurrences of fraud. Drug discovery, I think, is a very exciting area. I don't know if you saw, there was actually a headline, a little more on the scary side perhaps, but just last week, an article talking about scientists using artificial intelligence to create viruses functioning viruses that actually don't exist in nature. But I think when you turn that to good, drug discovery is going to be a huge beneficiary of artificial intelligence. Robotics, and I think even extending that to autonomous vehicles is another exciting area where AI is really making huge jumps forward. But I think from an industry perspective, right now, software development is where we're seeing the greatest impact, and that's evolving. AI applications are replacing a lot of very basic coding work that's done by software developers, but at the same time, software development is evolving so that those developers are now free to do much more advanced development applications.
And it sounds like a lot of these companies are still pretty early in that process as well. Is that fair to say?
Yeah, I think a lot of companies are still trying to figure out the best balance between the cost of using AI and their ability to gain efficiencies from it. And we continue to see these questions come up in the markets from time to time. We were going through a correction of recently in artificial intelligence leveraged companies where investors begin to question what's called the return on investment, or is all this investment actually going to generate enough of a return down the road to justify the capital investment that's going on.
And I guess because the adoption is still early, where is that money actually going right now? Like, what would the AI ecosystem look like for an investment standpoint?
Yeah, it's clearly going predominantly into the infrastructure side of things right now, and that's where we're seeing the most direct revenue generation is those investment dollars flowing right into that infrastructure. We started off from an investment point of view, the focus was entirely on GPUs, like those made by NVIDIA, so the brains of an AI model, if you will. And we've seen that evolve over the past couple of years. It's not that the importance of GPUs or graphics processing units has diminished at all, but we've seen other bottlenecks within that infrastructure build out start to show up. So whether that's memory or networking constraints, or even outside of the technology sector specifically, areas like power generation have become significant bottlenecks to building out this AI infrastructure.
And so if it started with GPUs, but it's clearly spread from there. And that actually leads into something that I know a lot of our attendees might actually be curious about, the difference between the companies building AI and the companies actually using it. Can you unpack that for us?
Yeah, so the companies building AI, they often get referred to as the picks and shovels. So these are the companies that make the hardware that is necessary in order to train and utilize these very complex models. So that can range anywhere from semiconductors to networking equipment to memory. If we look even outside of the technology sector, you've got areas like power generation is becoming a huge bottleneck for a lot of these companies, obviously. And so that's spread into other sectors like industrials, where companies like Caterpillar make turbines for gas-powered electricity generation, or into the utility sector itself. And so we've seen that really evolve over the past few years. The users of AI, more on the application side of things or software side, is a little more mixed, as we just talked about. It's still very early in the adoption phase for a lot of these companies. They're still trying to figure out the best way to use it, the best balance between the cost and benefit of using AI applications and how they can roll it out in their business. And I think for the software companies that are trying to provide these solutions, a lot of the incumbent providers or more legacy software providers are now trying to adapt their solutions to an AI kind of forward world. So they're trying to find ways to build AI solutions into their own models in order to provide value for their customers as well. And so again, there's that return on investment and potential for business model disruption that's happening in the application side.
Okay, so essentially the builders versus the adopters in a way.
Yeah, that's right.
Okay, now if we think about that ecosystem in mind, if someone's looking at this space for the very first time, where should they actually start their research?
Yeah, I think we're still very much in the phase where you want to focus on where the money's going, and that's still very much into the infrastructure side of things. Whether that's technology, or as I mentioned, other areas like in some industrials that have exposure there. I think there's a lot of different ways to play the AI theme. If nothing else, AI has become very pervasive across markets over the past couple of years. And so I think still the right way to start off in your investment is by looking at those companies that are seeing that most direct benefit from all those investment dollars flowing into the infrastructure build out.
Now, what would you actually be looking at when you are evaluating whether a company is a good way to play?
Yeah, so at Harvest, we're really focused at the core of our investment philosophy is long-term investment through great companies, and I think that applies here, especially in a high growth area that's very dynamic and moving rapidly. Is you want to start by looking for those companies that are leaders in whatever particular industry they're playing within that field. So look for those companies that have strong competitive moats, dominant market share. They have strong balance sheets, because even for those companies that are seeing the revenue benefits of the investment in infrastructure broadly, they're still scrambling to invest themselves in order to build the capacity to keep up with the unprecedented levels of demand that we're seeing. So having strong balance sheets and the ability to finance that capital investment themselves is very important as well.
Now, with a theme that has gotten this much attention, there's bound to be some noise and even some myths floating around it as well. What would you say would be the biggest misconceptions that you run into, or what you think investors run into, especially when they're talking about AI?
Yeah, I think one of the first ones is, we're still in this era, I would say, where people think that one company will win and another company will not. And I think right now, because the demand for artificial intelligence applications is so large and growing so quickly, that a number of companies can and will continue to benefit for some time. So I think that really argues for the potential or for a high level of diversification. When you're investing within the technology sector, you don't have to just buy a memory company and just own the memory company as your play on AI investing. You can invest in some memory, some networking, industrial company that might facilitate the power generation, some utilities that will benefit from grid expansion and updates to the electric grid. Another area where I think there's a big misconception is that these companies have gotten very expensive. And actually, we've done some work that suggests that companies in many of the companies, especially at the large cap end of the spectrum where we tend to focus, are actually not expensive at all compared to other periods in history. And so if you break down the price of a stock into its earnings and a multiple on those earnings, the huge returns that we've seen to the technology sector over the past few years have actually been driven almost exclusively by growth in earnings. There's been very little expansion in actual earnings multiples. And so I think that's a big difference from what we saw in the late 90s when technology expanded so rapidly then. Is back in the late 90s, during the buildup of the tech bubble back then, you had a very rapid expansion in multiples, and earnings just didn't keep up with prices. And here we're seeing the opposite. We're actually seeing earnings that are growing so rapidly that price is fully just reflecting the growth in earnings, and hasn't been a big expansion in earnings multiples.
That's a great point. It's not necessarily the winner takes all situation, but I do want to leave people thinking that this isn't risk-free either. What should investors actually be watching out for as well?
Yeah, I think when you're looking at any fast-growing sector or theme, the potential for volatility is also really high, because expectations can very quickly run ahead of reality. And that's not necessarily a bad thing over the long term, but in the short term, there's potential for very significant volatility. And so that argues for the importance of diversification as well. The second thing I would say to keep in mind is, particularly within the technology sector, especially if you're looking at a market capitalization focused investment product or investment vehicle, because there are some companies like NVIDIA, like Microsoft, that have grown so large, they can have an outsized impact on market cap weighted investment products. And so it's really important to make sure you understand just where your exposures are and just how diversified you actually are when you're investing in the markets.
I guess that you answered it in part. I was more thinking also as well in terms of like how correlated these AI stocks would be and the impact that it would have on the tech stocks.
Yeah, absolutely. Like I said, the AI theme has become pervasive across markets. I can speak specifically to being a technology portfolio manager. It's very difficult now to find a stock, at least in the large cap universe that I look at, that is not somehow tied to artificial intelligence in one way or another. And so making sure you're diversified is a much more difficult task than perhaps it was before the AI theme really exploded.
And as we start to wrap up, if we zoom a little bit out, how should investors actually be thinking about fitting AI into their portfolios that they already have?
Yeah, I think there's absolutely a place for it. But again, because it's become such a pervasive theme, there's a lot of areas of the market that are now correlated with the artificial intelligence trade that were not necessarily correlated with technology in years past. So areas like industrials, names like Caterpillar that you would not normally have thought would be tied to any kind of theme in technology, because they are leading providers of turbines used in gas electricity generation, as well as backup power generation. They have become very tied to spending on data center infrastructure. Another company in industrials area called GE Vernova, which is a spin out of General Electric a few years back. Similar story, focused on industrials and components of power generation, building turbines for gas power plants. As soon as the sentiment turns, or when we go through periods where the sentiment is turning against AI, they're not necessarily a diversification vehicle that they might have been in the past. Even utilities, in the utilities space, there are certain names that have benefited a lot from the sentiment around the need for grid modernization and grid expansion, electricity generation expansion. And so even a traditionally defensive sector like utilities, you've got that potential for high correlation with the AI trade as well. So I think just making sure that you're as diversified as you actually think you are, understanding what areas of the market the companies you're investing in are actually exposed to, and how they're exposed potentially to any AI is really important within this environment.
Perfect. Thank you so much, James. I think that's a great note to end on. Honestly, it definitely ties everything together we talked about today, and from what AI even is to where the opportunity would be and how it would actually fit alongside everything else that we would own in our portfolios. Now, with that, thank you again so much for joining the hour with us. We really appreciate having you here and being a part of the conversation. We hope you enjoy the rest of your day, and we hope to see you again in another session. Thank you again, James.
Thanks, Marcel.